Hey, John Stevenson here, the Guaranteed Retirement Guy, and today I want to talk to you about the pros and cons of a fixed annuity versus a fixed indexed annuity. A lot of people are comparing, should I go with a fixed annuity? A fixed annuity gives me this rate of return, and right now it's pretty high. It's guaranteed for a certain amount of years. That's great. There's no fees. It's pretty nice. But then, of course, I've got a fixed index annuity over here that can make me a whole lot more, and I need guaranteed income. It's going to give me a whole lot more than this just regular fixed annuity will. So the easiest way to really do this, I think, is just to show you my screen and go over the pros and cons that way. So you'll notice, and I just put Arizona, I put 60 years old, I put $500,000, and then I stretched out the time to take the income until 65. Now, obviously, the income's less if you take it earlier, but just let's look at this example as far as what are the pros. Okay, the pros are, well, I'm taking $55,000 a year in guaranteed income for the rest of my life. That's pretty good. You can see Aspida is the top one, F&G, followed by AIG, Sentinel, NASA, Athene, Heritage. So a lot of good companies and a lot of income. That is the pro of a fixed index annuity. That's one pro because, well, you're getting a lot of income. And if you take that income out for 30 years, you're going to take out well over $1.6 million. That's pretty good as far as guaranteed income from a $500,000 investment. And that's, you could live a lot longer than that. And so that's guaranteed for the rest of your life. So that's a huge pro of a fixed index annuity with an income rider. So the con, they're charging you for that rider. Okay, so let's look at that. So if we look at the top one, which is Aspida, you'll notice the charges. See the rider charges right here? You see how they will go, they're pretty decent, but then they get really high after that. Wow, look at that. That's a high charge. But then it stops because when the account value goes down to zero, the charges stop. So maybe during this time, I don't know, maybe you've paid out $100,000 in fees. Definitely a con, right? So it'll deplete your contract value really fast. But of course, if you're doing this for guaranteed income, it doesn't matter because that income continues for the rest of your life. You can see by the time you reach 89, it's already paid out almost $1.4 million. You live in under 10 years, you live to 100, you're going to get $2 million of income. That's really good. That's a huge benefit. Okay, then they show you hypothetical. They show you, hey, if we have decent growth in the index, your account balance is still going to run out. It'll just take longer. And of course, those rider charges will charge maybe a couple years longer, but eventually they'll run out because we'll just have no more account to take it from. Now remember, the annual income, the $55,000, that is not affected by those rider charges. The rider charges and the index credits that happen every year, they happen separately in your account value, and they do not affect the net income payouts that are happening every single month. So remember that. Usually if you want to look at an annuity, a fixed index annuity without any type of rider fee, you can do that, but those are best for just growth and maybe income later, but the guaranteed income amounts are usually half of what we can get for this. Okay, so that's the pros and the cons. Let's look at another con. Okay, the con would be the surrender charge schedule. Look at the surrender charge schedule. It starts at 9%, and you'll notice over the 10-year period, it'll eventually go down to 1%, and then, of course, after 10 years, it is 0. So that's a con, but if you don't need to take the money out and you're using it for income, then I guess it's not a con because you're never going to be subject to that surrender charge. The surrender charge is only, of course, there if you surrender your policy, you surrender your annuity. But if you're doing it for guaranteed income, then usually you won't. That's why we'd be talking about your situation together. We want to make sure you have enough liquidity outside of this so that if there's an emergency, you can dive into your savings and not into the annuity contract. Because the insurance company doesn't want you to do that. I don't want you to do that. None of us want you to lose money. We want you to be able to do very, very well with this. But they also allow penalty-free withdrawals. So that would be a pro. You notice there's penalty-free withdrawals of 10%. And that's typical for a lot of annuity contracts where they'll allow you to take up to 10% without any type of fee or surrender charge. Anything over that 10%, that's when you start getting subject to those surrender charges. So it's just nice to know that's there for you if you need it. But if you want as much income as possible later on, I would recommend not doing that. But it's there if you need it. So let's take a look at the fixed annuity. Let's talk about the pros and cons of the fixed annuity. Okay, these are typically known as MYGAs. And MYGAs, it stands for multi-year guaranteed annuity. So let's take a look. I'm just going to go through a few of these. So I'll just say 3, we'll go all the way up to 10 years. Okay. All right. And let's just say we want to look at, there's plenty of B-rated companies that will pay you a decent amount for sure. 6%, 5%. So depends on what you're looking for. But anyways, if you look at the 10-year, 6% is the highest you can get. And if we were to filter this down to, let's just say at least A, then you can see, the highest is 5.85 with Royal Neighbors right now. And then you can see these other companies here and so on. So here is, I would say, a con. Let's talk about a con. We'll go to ClearSpring. We'll just look at this real quick. Let's look at all the cons that we could have. And I'm just basing this off of $100,000. Okay, the con is they've got a surrender charge schedule too. Look at that. So let's say you lock this in for 7 years. Well, surrender charge starts at 7%, goes down to 2%, and then after the 6th year, it's 0. You can take all your money out. And so at that point, if you let it sit and you let it compound and grow and you didn't live off the interest, you can certainly live off the interest if you wanted to. But if you didn't, then you're going to take out $137,884. So that is the guaranteed amount that you're going to take out. Guaranteed ending balance, which is nice. So if you're looking for a place to park your money, these are perfect. The con is well, during that same time, you could have had it in a fixed index annuity earning you a whole lot more. And the income value, which is completely separate, can be earning a whole lot more and give you a lot of guaranteed income at the end of those 6 years versus you just taking the $137,000 and rolling it into an index annuity with an income rider. Your income will be lower had you just put it in there in the first place and let it grow over there. So that would be the con if you were to do this and your goal was to take maximum income. Another con is, it's only locked in for a certain amount of period. So after this, you got to find something else or it reverts back to the minimum, which is like 1 or 2%. So that's not that great. And so you got to remember that at the end of that period, you have to roll it into something else. Otherwise, it's going to revert to a very low rate of return. Anyways, it's a great place to park money and it's very popular right now because interest rates are so high. But just remember at the end of the period, you do need to roll it into something else. And I can help you with that. If you're looking at MYGAs or fixed index annuities, I've got access to all of them, and I'll be happy to share all of them with you. So that is the con. The pro, the pro is you have a guaranteed interest rate. So this doesn't give you guaranteed income for life like the fixed index annuity with the income rider does, but it gives you a guaranteed fixed rate. So let me put that in perspective. The pro is, you see this green line here, it's going to go up every single year, guaranteed. So let's say 2 of those years, the stock market or the index, in an index annuity goes down. The con is you don't make any money those years in an index annuity. You don't lose anything. That's the pro. But with a fixed annuity or a MYGA that we're looking at right here, the pro is it will continue to get that guaranteed rate of return, which is 5.5, no matter what. So if the market's down for 2 years and all the fixed index annuity holders are earning nothing but not losing anything, but they're not making anything, you're still getting 5.5. So that is a definite pro. So it really just depends on what you're looking for. If you're looking for just a place to park your money and you want as much interest as possible, and maybe you want to live off of some of that interest, you can do that. A lot of these will allow you to do that. Let me just look here real quick. Yeah, so it allows you to do interest only, which is great. Interest only in the first year, and then years 2 through 6, it gives you the 10%, up to the 10%. So pretty standard, but it's still nice to know if you want to live off of 5.5%, you can put $1 million in there and you'll get $55,000 a year. For 10 years. You could do that. For 6 years. If you were to do 10-year option, let's see, just look at the 10-year here. It's 5.8. So you get $58,000 per year, and you can see that Rural Neighbors will actually allow you to take interest only out each year. So you could do that. At the end of 10 years, you still get your $1 million. That is definitely a pro. You get return of principal, whereas a fixed index annuity, if you start taking income immediately, your principal balance may go down. Now, you're getting a lot higher income in the beginning, and if that is your goal to have the highest income, then I highly, highly recommend a fixed index annuity with an income rider. But if you don't need as much income and you just want to make sure that your principal balance is there at the end of 10 years, then do a MYGA. You get $58,000 a year with his Royal Neighbors right now. That's pretty good. So you could do that and then roll it into something else. Just remember that income is, that interest is guaranteed for 10 years. And then at the end of 10 years, you got to find something else because rates go down to 1 or 2% or whatever the minimum is, and you got to find something else. And we don't know what income or fixed index annuities are paying. If you were to thinking that you're going to take that money and put it into an index annuity with an income rider and turn on that income, we don't know what those rates are going to be in 10 years. So it could be lower versus you finding one of those right now and getting that for life. So there's a lot of different factors to think about. If you want to chat, there is a link below this video. Go into my calendar and just find a time and we will sit down together. We'll look at your specific situation, whether you're looking for income, maybe you need income and you need just some guaranteed growth and you just want to park some money. We can do both. Okay, whatever you're looking for, I'd be happy to show you what they're paying and of course, what you have access to. And then we can go from there. I'm not going to try to pressure you or anything, just want to help and provide value. And of course, if you're looking to purchase an annuity, then I hope that at that point you will feel that I have earned your business and I can help you put that together. So anyways, hope you enjoyed the video. If you did, please like, please subscribe, and we'll see you next time.